how would you like to make your first million? And today we have Chris with us, which is the CEO of Spartan Trading. So, Chris, tell us, what are the 5 steps that you recommend entrepreneurs in order to make the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Well, Harry, I think it's really important, when someone goes to make their first million, one of the biggest things that they need to focus on first out the gate is they need to be going into something that they actually like. If they're not willing to put the time and effort in and have the passion to actually grow the business, then they're going to be failing, fairly quickly. I think a lot of the times people, when they get into business, they think about the money aspect and they only focus on that and not actually if they enjoy it, like it, etc. I find that if you get into a business like that, you're gonna have really hard issues scaling it because the amount of time and effort you put in day to day will diminish as you move forward. Consistency is one of the key things to becoming a millionaire or to making money in business. Without consistency in your behaviors, it's almost impossible to get there. So one of the first things that I think makes the most sense to focus on getting to that point, and this is more of the foundation of kind of starting off, is you want to learn what maybe makes sense for you in terms of what industry business to focus on, what you actually enjoy, and within that, I would say you need to understand whether or not people have made money doing it before. If people have made money doing it before within that business or that industry, then most likely it's replicable. And if they haven't, then it's not to say that you can't, because it could be a disruptive type of business that you're starting, but it's going to be a lot more difficult. There's going to be a lot more barriers to getting to that point. So the first step would be, you have to find something that you actually like to do, that there's some sort of a gap that we've seen is a larger addressable market. If the addressable market's quite large, then it's going to be easy to take a little bit of a percentage of that market share, and we can go from there. Now, for me, I'm a trader. One of the biggest things, getting into my type of a business is, if you don't like to sit there in front of the screen and kind of do the work, do the due diligence, and do it consistently, there's no way that you're going to be able to make money consistently doing that. You're not going to stay disciplined, etc. So, for me, that was one of the most important parts for starting out. So that would be step number one. Now, step number two, within your business or industry that you're looking at, you need a niche, and you need a niche that pretty much only you can address, where individuals will start to see you as different from other businesses. To be a very successful entrepreneur, you need to have some form of a stick with what you're doing. When it comes to trading, I know what I'm good at. I'm good at momentum and technical trading. And, from, my standpoint, I focus on those aspects when I'm in the market. I only search for those types of trades, etc. And when I'm dealing with individuals that are within our group, that I'm teaching, etc., that's what we focus on. We focus on the technicals. We focus on some of the fundamentals as well, but mainly focusing on the technicals because we can stack the probability of success of what you're actually doing. We can figure out, risk reward ratios, and we can make adjustments to your behaviors within the market to actually push yourself ahead. So I think it's really important to understand kind of your niche within your business to make sure that you're not only performing and being consistent, but people are coming to you because you have that ability to help them with that specific thing. And it also helps you separate yourself from everybody else. If you're doing something that everyone else is doing, there's no separation, and essentially you become somewhat of a commodity where people can kind of go from you to another business that does the exact same thing. If, for instance, I'm selling a product that's very basic and someone else is selling a product that's very basic, at that point it's just the marketing of maybe you see this product first before the other product, and that causes you to buy, but you really don't stand out. And I think that's probably an issue that a lot of people face in regards to scaling what they're actually doing. And that kind of leads me to number three. Number one, obviously, figure out your industry. Number two, figure out your niche. Number three would be find something that you can actually scale. If what you're doing is not scalable, then it's almost impossible to continue to grow the business. And in order for something to be able to scale, you need to get it to a point of, they call it critical mass, where then it kind of grows exponentially. If you can't get it to that point by yourself, then most likely it's not going to be something that you can continue to scale going on. If you get to that critical mass point and start putting other bodies in place to help you grow the business, then you're going to be able to scale it fairly quickly. And that can be with, maybe you're doing the selling out the gate for the business, or you're doing the trading out the gate for the business with a certain amount of size. Unless you're able to size up, you're unable to push forward and essentially make more money in the long run. So obviously, that's an important aspect as well. I think one of the other really important things that I find a lot of people kind of hit this wall and then they stop. But for me, all my businesses, I always reinvest 90 to 80% of my profit back into the business to grow it. Whether that's going to be, for trading, it's, increasing my size. It could be, improving the user interface. It could be, marketing, bringing on more people, et cetera. But reinvesting into what you're actually doing, as long as it's scaling, will start to create exponential returns. At some point, the returns will be diminishing, but unless you're reinvesting to that point, it's impossible to really scale the business up that quickly to, make $1 million. And then number 5 would be, you need to diversify what you're doing. When you start to make money in business and you start to, let's say you get to the 7-figure or 8-figure mark, you can't just continue to put all your eggs in one basket. You need to diversify what you're doing. I think you need at least 3 to 4 streams of income, regardless of what you're doing. And, the one thing I love about, my business trading is, obviously you can, day trade, which is more of a money generation kind of day-to-day activity that generates income. You can be investing. You can also buy, getting a call there. You can also buy investment vehicles, like, something that pays a dividend over the course of time. You can buy something a little bit more long-term, which is focused on growth, like most of the tech sector, et cetera. And then, within some of that is owning and managing a business. This could be starting businesses that are not necessarily the same, but they fill another niche or another gap within the industry that you're familiar with. And if you're familiar with that, you can take your business and replicate the model into that new niche, and you're going to be able to scale that up fairly quickly. It's all about, I think at the end, once you make a certain amount of money, being able to protect it and being able to scale that further. And if you don't diversify, then you're going to have a little bit of trouble, or there could be some sort of a black swan event that could wipe you out in the future. So I think that's a really important aspect. And business is always evolving. You need to be evolving with it, and the only way to do that is to kind of change your model as well as create new models and grow those going forward. So I mean, obviously a lot of these things are fairly basic, but I think they're really important. And when you kind of lay them out logically, they make a lot of sense.
So trading is an amazing vehicle because you can do it with your own computer. So why you decided to become a trader on the first place? And tell us what's the good, the bad, and the ugly, because you hear some people, well, lost a lot of money in the market, and some people make money. So what is the good, the bad, and the ugly of trading, and why you decided to become a trader in the first place?
Well, the reason I decided to become a trader, I think, number one is you have no boss, which is great. You're in full control, but there's the issues that come with that. We'll talk about that in a second. But you also have, with trading, no ceiling. You can make, essentially a limited amount of money. You can also lose a limited amount of money. But the reason I love it is it's such a scalable business. And, when I got into the business, most people will lose when they start trading. And I always say that no one's born a good trader. You have to learn these concepts. A lot of them are counterintuitive to human nature and how we actually think. What I mean by that is a lot of people that fail in trading make emotional decisions, and that's how they base their trades. And typically those are wrong. We need to be basing our decisions based off of logic, what we're actually seeing on the chart or the fundamentals, et cetera. And if we can do that, then we're going to start to actually develop some form of an edge. Now, the good of trading, obviously, you can do it anywhere. You can scale it to infinity. is that easy? No, it's very difficult to do. And that kind of leads to, the ugly of it. It's probably the hardest thing, one of the hardest things you can do to make money, because it really shows you kind of who you are and what you're made of. All your flaws will be uncovered when you're a trader, because if you're not disciplined, you're the one in control. You will lose money if you're not disciplined and you let something go over a max loss amount. I think it can be very frustrating at times if you don't have a system in place. And that's, primarily what we do with traders is we work with them to put a system in place, understand the probabilities, understand the risk reward, and set them up correctly so that whenever they're operating within the market, everything's controlled. And of course, these are just our opinions and kind of what we use in our system, and we educate people in that regard. But I think that's the most important part, is you need to have some form of framework to work within the market, because there's a million things that you can do, and it can be extremely overwhelming if you aren't controlling, your behaviors, your discipline, etc., on a day-to-day basis.
So and trading, there are a lot of strategy. So can you share in which one you specialize?
Strategies. Okay, so I mean, I said it before at the
What do you mean
beginning.
by technical trader? It sounds
Yeah,
difficult. I see a lot
so
of screens behind you.
yeah, so technical trading is basically trading that is based off of patterns that form from on the chart from a price action standpoint. So when over the course of time, price will move and it will cause certain patterns to occur. So what I'm doing is I'm analyzing those patterns that are occurring, looking at the volume, as well as I'm mixing in fundamentals like news, looking at filings, understanding kind of what's going on in the structure of the actual each company, if there's certain deals that are going on. I'm using all of that information to make decisions whether to buy or sell, essentially, or hold. And the reason I really like technical trading is it's fairly black and white. There's either something's breaking out or it isn't. There's either volume or there isn't. So you can get a pretty decent idea of what's occurring at that given point in time and what to do. I think where a lot of people fall into a trap is they start to rely on their opinion to make and take positions, whereas I try to just be reactive to what I'm seeing from a technical standpoint, so to speak.
And where do you learn? Who taught you?
So I mainly was self-taught. I came out of
Oh, wow.
university. Yeah, I came out of university.
Where are you based?
I'm based in Vancouver, Canada.
Oh, wow.
Yeah, so I went to university here. I travel all over, and I do have some partners in the States, etc. But I started by myself. I built a system. I was basically just back testing and then just recording probabilities. So you learn statistics in finance in university, and I was using what I learned there to figure out basically what performed and what didn't. And then over the course of time, you start to get a lot of different data points and you start to eliminate the bad, focus on the good. And that's what actually becomes scalable. And that's the process I take with every single person that I, would have in the mentorship program, et cetera, because it is replicable and it does work. Now, with that being said, there's been a lot of different people along the road where you learn from. For instance, one of my partners, we call him South Beach, his name's Steve. He ran some of the biggest hedge funds in the world. He was the biggest option premium short seller in the world for about 20 years. Worked with big names like Stevie Cohen, etc. And I learned a lot from him in regards to the macro side of the business, which is the macro environment is essentially how geopolitical, how the fundamentals or what's going on in the world events, et cetera, for instance, like COVID, are affecting, certain businesses. And, it seems obvious after the, let's say the consumer's not doing as well because, you're looking at, credit card debt at all-time high. So the consumer's probably not doing as well. Then we can understand that, okay, then maybe the retailer names are going to be, producing worse quarters, because we would expect that if the consumer's not doing well, they're probably buying less products overall. Now that's not always the case. It could be, maybe it's the consumer products that are in person over the stores, but Amazon's continuing to scale up just because of the ease of access. People prefer to buy there. But there's all these different little nuances that, I would learn from him. My other partner, Beth, she's an option specialist. And both my partners, they have about 45 years of experience, which is a lot of tenure. She, kind of taught me the ropes on the option side. And then I took the basics that she taught me and I kind of built my own strategy and system more so on the technical and momentum based side of things. And then there's other, individuals that I've learned more on the institutional side, kind of the background, how, private placements are done, financing's done, those types of deals, et cetera, et cetera. So, I mean, there's a lot of different individuals along the way, but that would probably be the main two.
Yeah. And then the the next question I would like to ask you is in about the returns. Okay. Because what returns do you think that they are realistic when we doing trading in terms, I don't know, of options or in terms of investing in the market, and what returns are sometimes unrealistic. So our audience can have any idea if they learn the strategy, how much can they make in the different vehicles? Can you explain a little bit more about this?
Sure. I mean, the returns.
Normal return in options and normal return in the stock market.
Well, it depends. I mean, the last couple of years have been pretty interesting. I mean, the S&P has returned, I think, well over 20% in the last year. For instance, like the gold market this year has been absolutely, ripping. I think the standard 10-year return on the S&P is around 7 or 8%. Sometimes, I think maybe a little bit higher now just because of the last 2 years. But if you're investing in the market, the standard return is typically harder to beat. Most money managers have a hard time beating that. And most day traders fail because they don't put in, the right practices as in regards to risk control and kind of everything that we touched upon. So, it's hard to speak on what the standard return is besides the, general market. I think individuals that get an edge, and they apply it with consistency and discipline, they can have exceptional returns. For myself, I'm up over 100% for the year in my main account. I have a smaller account that's, I think, above 270%. In the last 8 months. So it depends on the year. It depends on what you're trading. I think it really depends on the individual and kind of your strategy as well. It's hard to say what's the average return besides talking about the S&P, because if we're talking about an individual, it's really individual focused. What can someone expect? Someone can expect if they, apply the right strategies, they do the right stuff. For instance, if they work with us and they apply, the consistency, they apply the system, they're disciplined. I think that they can see exceptional returns, in my opinion, but it's difficult to apply all these things consistently without accountability and without really putting that effort in. So to kind of talk about what can people expect, it really depends on the person. I can tell you this: there's a direct correlation with the amount of effort you put into something with what your return's going to be. But that's not to discount how important discipline and risk control is in this business. It doesn't necessarily answer your question, but it's a very hard question to answer, almost impossible, because without
Depends on so many
understanding who the
factors.
person is, it's really difficult. I can say what I've done this year. I can say what some of my my members or mentorship students have done. I can tell you that, but the
Can
average
you share a
person
little
is
bit
kind of
more
different.
of that?
Sure. So
The result that your members have achieved.
yeah, I'll give you two examples. They're two very different examples. Now, one, her name's Elena, and I call her my star student. She's done tremendously well, but she was by no means not a profitable trader. She was a profitable trader before she came to me. She came to me about 2 years ago, and I believe she was making somewhere in the realm of 30 to 40K a month on average, which is a nice amount of money. And what we were able to do over the course of 2 years is scale her up. And she's made about 4.2 million in the last 2 years applying the system and aggressively scaling. Now, and I've done interviews with her. We have all of the data to prove this, etc. And that goes to show you what's possible if you apply the system with discipline. Of course, that's not guaranteed. Not everyone's going to be able to achieve that, but she was. And and the reason she was extremely disciplined and aggressive in terms of her scaling. I'll give you another example. So I have an individual named Mateo, mentorship student as well. I met him last summer, actually. He came down and wanted to meet me, young guy. probably in his early 20s. Really nervous, wasn't really sure where to start. He needed a little bit more time to onboard, so I gave him access to all the educational stuff, let him use the system. I gave him my settings for everything, and he started with a 5K account. And since he started, I believe he started trading about 3 months ago. He's not quadrupled. He's almost times five the account. So about 450% return on his account within 3 months with a 5K account, which is a smaller account, of course. But he was able to achieve this by, applying the system, being very disciplined, etc. And I think he's got a very bright future ahead of him. I think he's going to grow fairly quickly, be able to scale up more. So, it depends on, again, the individual, but these are some of the I guess kind of the two examples I like to touch upon.
Yeah, that's fantastic. So, can you tell us what have been your biggest challenge in business and how you overcome that challenge?
Yeah, I think, and just to kind of speak to some of the other businesses, I do a lot of different things. I have, obviously, I'm a trader. That's like its own thing in general. Then I have, Spartan Trading, which is the educational group where we have, our community. We do the mentorships, etc. Aside from that, I built an algorithmic trading business with four other partners. I've taken control of that business, and we're going to be looking to raise some capital, take it public, and that's going to be kind of a new, different avenue of getting into the deal side of the market. I've done a lot of different things in, venture capital, throwing money into those types of investments as well. And I've started multiple businesses that have all done very well, which is probably, one of the biggest, things to get any business to getting to that point is kind of those 5 steps that we covered. But really, I think the last two where I talked about, reinvesting into the company so that they can scale, and then diversification into other, gaps within the market. That's how you're going to survive. Now, one of the biggest challenges I think would be when your business gets stagnant and you feel like you're just doing everything, but you can't grow. Most people give up. And I think, especially in trading, they lose enough money where they give up. I don't think I have that bone in my body where I'm willing to give up on anything. I'll continue to push forward until I succeed. You have to have that winning mindset where you think and you can do it. There's going to be times where you're going to feel like a failure. You're going to feel like you can't get over that hump. But if you just make a little bit of progress every single day, and I love to live by the Kaizen philosophy or the Kaizen approach, which is small incremental changes over a course of time create a massive change. Over the day to day, it may look like we're kind of level, but over the course of a year, these little, let's say you're just going up a millimeter, over the course of a year, it's going to look like a big gap from where you started to where you are. So the Kaizen approach is something that I think everyone should apply, especially, within, business when they're having challenges. Just try to make a little bit of progress every single day because it's going to add up in the end.
And if people want to learn more about you and find more about what you guys are doing, how people can find you, how this process work?
Sure, we're on all the social media platforms. So Spartan Trading on Instagram, YouTube, Twitter, or X, I should say, TikTok, etc. You can go to SpartanTrading.com. You can find us there. If you want to talk to me directly, guys, you can book calls there. If you want to get a hold of me very quickly, X, I answer everybody's DMs, or you can just tag me in a message. But yeah, we're readily available.
And what message do you have for all the traders out there that sometimes they have a bad day? And why sometimes there are bad days in trading?
Sure. What
you
I can
make
say
money
is
every day, no? Or there are sometimes things go wrong. So
of
how do
course,
you feel
sometimes.
when things go wrong? And what is the definition of bad day for you guys?
Well, I'll give you guys. I'll leave it with the story here. So one of the worst trading days I had, I lost about 400K US in about 30 minutes.
Wow.
Yeah. So what I was doing, and this was when Amazon was trading around like 11.20 per share before a couple splits. And what I was doing is I found a way to get a lot more leverage than I should have on a position. So I was unwinding butterfly spreads. So a butterfly spread is an option spread. It's an option strategy where basically you're looking for the option price to be between two different strikes in order to make money by expiration. What I was doing is I was unwinding both of the long sides and holding the short. And you're double short the inside of that trade. Now, what I found is the system wasn't picking up how many contracts I would have on short. And if anyone, is familiar with trading options on the short side, it takes a lot of margin to do it. But I found that this way it wasn't registering. They fixed the problem, by the way, guys. This was years ago. But I was equivalent to, I think, short like something like 20 million or something like that of Amazon at the time. And at 11:20, and essentially, some news came out while I was short, and the stock dropped very quickly, and I was down like 400K, 500K, 600K, 700K, and then it started to bounce back after the news. And
Wow.
I decided to exit the position at 400, and then, obviously it was a big hit. And then if I didn't, though, the next day I think it dropped to around like $1.20, and this was on a Thursday, and those options were expiring Friday. They also could have signed me the contracts, et cetera, et cetera. But regardless, it was a big loss. I had to take it. I was able to take it because I figured it was going to get worse. But, I went for a walk after that trade, I remember, and I was like, this is going to define me? No. Am I going to give up from here? No. I think most traders and most people would give up after a big loss, whether it's in business, et cetera. But you need to use those losses as lessons and use them as stepping stones to get yourself to that next point. And if you can do that, you're going to be much stronger for it. And you're probably going to be able to accomplish pretty much anything that you set your mind to going forward, within reason. But it's the ability to pick yourself up when you're down is the key to, being successful in business. And if you want to be an entrepreneur, you want to be a trader, you have to, get ready to lose, get ready to get kicked when you're down. It's how you, pick yourself up and move forward that's going to, dictate how successful you are.
Yeah, the biggest lesson happened, when something goes wrong and you lose money, this is when you learn forever, right?
Exactly.
Yeah, in business, in everything, when so what do you think that you could do better, or how you approach the next day? You have this bad day, you almost lost almost $500,000. It's painful to close that position. Yeah, you still can think, well, let me hold a little bit more, maybe I'll make, at least I don't lose money, I make my money back. It was very you have to be very strong to close that position, being down almost $500,000. What made you to close this position? Where do you find the strength?
Well, I figured it was going to get worse first and foremost, and if it did get worse, at the time, I think it would have.
It get worse next day, or
it did get worse. It was like 1.2,
wow.
1.3. If I did close it, and at that time, would have been like a majority of my account at that point in time. So
goodness.
I figured, it's either I have.
So how you figured out that it's gonna get worse?
Well, I was just looking at the chart.
The charts, yeah.
Yeah, the chart looked like it was, technically breaking a large support, had a lot of room to the downside. So, I had to exit the position. It was hard to do, but I figured, I have a fighting chance of actually coming back after shaking it off. And the next day, I try to treat every day as a new day. I can tell you that probably was one of the best lessons that I've learned in trading, because it allowed me to be, a lot more disciplined and understand, how wrong things can go that quickly. I was using that strategy for like 2 months, and I was making a good amount of money every single day, 10, 20K on some positions. And I was able to come back and just trade normally and make that money back within, I think it was like a month and a half. But, if I didn't do that, obviously, and I probably would have, maybe stopped, or I at least would have taken a much larger hit. It would have been a lot harder to come back from. So it's better to come back,
right? Yeah,
exactly.
100%. Okay, so thank you so much for the podcast. I really appreciate it. And for all of you following the podcast, see you in our next episode of Unstoppable. How brave entrepreneurs break that wall and achieve the first million. Bye for now.
Follow us for more interviews with the world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.